I'm George Ratiu, Manager of Economic Research with Realtor.com. March has flown by and here we are, April 1st. No joke. Spring is upon us, signaling a time of renewal and fast changes. The economy and real estate markets are also undergoing noticeable shifts. The final update to fourth quarter 2021 GDP showed the economy grew at a strong pace, even with a slight downward revision due to a slower gain in consumer spending. Solid economic growth drove record high corporate profits, which posted the largest gain since 1976. With the Omicron variant behind us, February's consumer spending increased as well, but rising prices are weighing heavily on American families. The big challenge is that even while wages also increased, when adjusted for inflation, they have been falling behind prices. The PCE price index, the main measure of inflation watched by the Federal Reserve, notched the highest gain since 1982. These rapid changes are pushing the Fed to tighten its monetary policy faster to stem inflation. The good news is that the employment outlook for workers is bright. Another 4.4 million workers quit in February, with most moving to better jobs. Meanwhile, companies have over 11 million open jobs, still near record high, putting job seekers in the driver's seat. Jobless claims remained low even with an uptick last week, which showed that most companies are going out of their way to keep people on board. The number of people drawing benefits is at the lowest level since 1969, when bell-bottoms, flower power, and Woodstock were in vogue. Rounding out the employment data, March's payroll numbers showed that the pace of hiring picked up, pushing the headline unemployment rate at pre-pandemic levels. Hourly wages rose from a year ago but continued to lose ground to inflation. The employment tailwinds boosted consumer confidence in March. However, Americans remain uneasy about high inflation and further economic impacts from the war in Ukraine, COVID lockdowns in China, and fast rising housing costs. Speaking of rising housing costs, mortgage rates jumped for the fourth week in a row to the highest level in 4 years. At this pace, rates will hit 5% in another few weeks, just as the spring season hits its stride. For buyers, this means an extra $440 on their monthly mortgage payment. Not surprisingly, demand is taking a hit. Realtor.com's March inventory report shows that rising interest rates and high prices have moderated demand for homes. Some buyers are priced out and bowing out of the market for now. Looking ahead, the Fed will have the challenging task of balancing the need to tame prices without cutting so much into credit availability that it risks pushing the economy in reverse. Keep well this week, enjoy the blossoms, and we'll keep you updated on the latest at our website and Twitter feed.